Good morning, friends. This is time for the trade plan for 18th of June 2020. Overnight, US markets closed lower, but I wouldn't think that they have closed lower by a whole lot. And given that we are anyway not participating in the rallies these days, so my sense is that we are more consumed by local issues. Now, this India China situation is going to keep the market under pressure. Under pressure need not mean going down. Under pressure can mean that we stay range bound. There is no doubt that it is a tricky situation. Why? Because now China says that the Galwan Valley is their area. And if India wants to contest that, let's not be under any impression that you can request China and they will give it back to you, or you can negotiate with China and they will give you back your Galwan Valley. You know, I would think if we are serious about what we say, then some sort of a limited action needs to happen. Otherwise, like all other times, we will have to cede that territory. But if the matter gets resolved somehow, I don't know how, then chances are that we play a catch up act. And I have seen even the worst of conflicts, like the world wars, India Pakistan war, Kargil, everything finally gets resolved and people move on. So, given that we are at the worst possible phase of this situation, I mean, the news is out. They are already sitting there. The first clashes have happened. So, any news that is known does not impact the market to a large extent. Now, let's go to the chart to see what we can expect here. Okay, now this is the daily chart. In this, I think you can clearly see that the market is range bound. Broadly, 99.50 to about 97.20, 97.50. The range is visible, but we are still trading above our 20-day moving average. So, it looks like we are kind of consolidating here, and finally we should move on the upside. Okay, if we look at the lower level chart, again, this was the range that we drew yesterday. As you can see, we have basically we have returned from the upper end of the range. So as long as we remain in this range, I don't think there is much to worry about. See, the news flow, etc., will continue. But I would think that by now we would have moved decisively into a downside zone if the markets were really worried about this, as in the markets look forward. So the markets are expecting that there will be some resolution. They also don't know how, but like today, the SGX is down about 50 odd points. These are all declines and dips that you should buy into. That is my opinion. And on the bank nifty, if we go to the daily chart, Again, you can clearly define a range, and based on that range, you can easily come up with levels which are about 19,500 to 19,000 to 20,500. Uh, this is the smaller range. The large range is, I think, 17,000 to 21,500. Now, again, you see that we have come off, but we are holding on to Friday's low, which is a very key event for the Bank Nifty. Again, on a 5-minute chart, if you see, despite all kinds of Supreme Court cases, etc., the market is holding on. And again, it hit the upper end of the range and it came off. So from a bit of a positional perspective, what you should be doing is building long positions into this decline. From a very day trading style perspective, I think you have your range and you should try to trade this range 9750 to about 9950. On the Bank Nifty, 19,500 to about 2,500. So this is the range based on the chart. Now, based on the Camarilla zone, what we should be looking for is trying to buy, or rather the support zone is 97.56 to 98.05. Resistance is at 99.03 to 99.52. So basically similar kind of range you have. So the market should be between 97.50 to about 99.50. On the Bank Nifty, support range is 19,760 to about 19,950, and 20,350 to about 20,550 thereabouts. So more ranging action expected today, and till this geopolitics continues, I think you will have trouble on the upside. But each time we go down, I think the larger player will be building position. So from a very positional kind of orientation, you should be buying into the market. As far as the S&P 500 is concerned, again, I don't think this chart has been greatly damaged. So my sense is that the S&P continues to be in a bullish zone, as you can see here. So just an inside day yesterday. So basically, I don't think much changes here. So that way, we continue with our higher low, higher high type of situation, and at some point, we should get towards the 3250 kind of zone. So nothing to worry on the S&P. And even in our case, once these short-term concerns are out, I think we will move higher. Now, every day, things are going to move fast and there'll be news flow, etc. So that we have to keep in mind, and accordingly, buying out of money calls is the right way to go, because you know choppiness and volatility will create problems. There is no question about that. That should be all for the day. Take care, trade well, and please consult a financial advisor.